Okay, we should be live now. Gonna check and see here on the channel. Gonna see how we're doing. Oh snap! I'm already messing this up. So good morning. I hope you're having a good time. Good morning. Gonna see if this. Oh snap! Look at that. See if I'm live here. Okay. I think what's causing a bug is that it's connected to two devices. How about now? Let's see. How about now? Okay, so I got it all fixed. Okay, so I just wanted to test that out real quick. Um, Gonna be live here in a moment. Wait, I am live. Okay, so I hope you're having a good morning. I'm sorry for the delay. I'm sorry for the awkwardness there. I just wanted to test the live stream, test the signal, test the audio, test everything. Kind of just test everything before I shoot, but I'm doing everything on the fly. Okay. So I know it's been a while since I've last updated y'all on markets and trading and whatnot, but it's just been like, I've been working on a job and been doing this just on the sidelines. It hasn't been taking full priority of my life like it once was. And, I'm just focusing on other things. In the meantime, I've been studying, I've been rewatching, replaying, reviewing, and all this is occurring behind the scenes just to get me into the tone with what's been going on lately. So I have a new setup. Like the way I'm organizing the charts has just been is a lot more different now than I was doing, months ago. We're talking like September, November, October, and it's getting good. I think I'm understanding this a little bit better, but I'd rather just show you what it is that I've been watching. You'll see that I'm running the free version here. It'll pop up ad. But yeah, if I can just show you what it is that I've been looking at here. To start, first and foremost, DXY dollar index. Definitely, definitely feeling bullish on that. Even though uh, institutional traders are all selling dollar right now at this time. It's still on discount, and I do predict that it'll be going a lot further, a lot more into the premium zone before it starts to sell off. So that's a cause for concern. While it's doing that, indexes are going to be struggling to do some uprises right now. So what I'm trying to say is that what we're looking at over here at this time, it's not looking so hot. It's only going to go up to go down. Like right, he's going to go into premium, right, to gather up more sell orders so that institutions can sell this commodity at a higher price before it starts getting down lower. How low? I'm talking back to like last year's, sorry, not last year. I'm talking back to April levels. Back down here, April 1st, March 31st, kind of like those levels. You're gonna see on my arrow over here, and we've crossed this. Uh, goodness, we've crossed these south side liquidity. So I do think that we are in the midst of creating a larger market condition that is prone to selling. So in this case, we're going to take this high to low. This is going to be our dealing range, and we're working up the premium side of it right now. So again, as I've mentioned before, I think we're only going to go up here just to go back down because of the way things are going right now and the uncertainties and the on and offs on the war and such. Like it's very confusing time to like navigate the news and every day something's happening, right? This guy's always tweeting about something online, and it's always like it's always like all of a sudden, I mean, these people know what they're gonna say before, but I mean, just like people like us, people on the outside, we're not gonna be, excuse me, it's creating these conditions where it's just kind of a difficult read on it, but it's if even though it's still causing conditions that it's difficult to read, like the fact that it's still showing up signs of what it is that we're learning, kind of makes it feel what you call it, like it can only do this unless we do that, and unless you know how to read what it is that they're setting up for, right? The footprints, the tracks, which is what I'm trying to get at here, is that you can actually see perhaps what is it that they're going to be doing. So on the macro macro side here on the right panel, you can see this is going to be the NDX. Now this is the CFD, right? Because like if you go into TradingView and you want to do the actual NXD options options chain, like it's delay data. So I'm literally using the CFDs again for a source of real time data without having to pay the the subscription. And then we have here on the bottom left, we have the NQ futures. I have it to the 15-minute chart. Now I have it here with levels, the with levels of the 60-day look back, as well as the most recent gap that broke the swing low, which is this suspension block over here. So it's been feeling a little bit bullish because we crossed the consequent encouragement. This is a sign of bullish price action. And then we have this golden, I call it the golden fibs. I'm not sure if you can really see it on the stream, but it's just an area for me to distinguish that this is a balanced price range. So if we're going to be crossing the medium threshold of this, it's highly likely that we're still going to be remaining bullish price action. But in the meantime, I'm using this as like a barrier, like a resistance zone. If it's not going to tap this, we could be seeing a sign of a reversal to head back down lower again, back to lower prices. So these are just like anchor points for me. Like it could tip here, it could tip here, it could tip here, or it could tip here. The moment we see a market structure shift, that's how I know this is where we're going to tip, head down lower. Right, but you have to be flexible with these kinds of things. Then this is a lower time frame golden ratio. Golden, not a golden ratio. It's a golden fibs I call them, because this is again a balanced price range on daily. So we have the price action that occurred on Friday and Monday. We have a high to low, higher low, higher high. So as a matter of fact, this whole range here from high to low, it's going to be balanced, right? Because it's provided sell side delivery, then it was met with buy side delivery. So this whole area here is balanced. If price were to come back here again, it would sort of struggle to meet those areas unless we're really higher time frame bearish, which is what I'm telling you all that I think we're doing. So we're just treating this as support right now to go back up to premium areas to go sell it back lower. Okay, so I was just looking at here the NQ. So this is futures, not a CFD. Here is the micro futures contract of the NQ. So it's the same thing as the NQ down here, futures, but this is the micro. So this is a smaller, scaled futures contract. So instead of $20 per point, it's going to be $2 per point. So this is kind of like what I'm using to trade. It's filled with a lot of lines, as you can see. But these lines just pretty much represent to me the first percent of fair value gaps, the opening range gaps, and the liquidities that we have yet to tap. So you see that we've crossed a bunch of these lines. So I'm going to delete that. So, and now that we're heading into Thursday's July 16th New York lunch buy side liquidity. So that's going to be an area there of interest that price can use to either create like a turtle soup to go down lower or to set it up as a target. That's exactly how I'm using these remaining liquidity pools. And if you would like to know how is it that I label these, maybe we can make like a separate video on like how I do my setups, how I organize my charts. Because this past month I've also just been messing around with how to focus on getting my attention like good, like how to get myself organized and situated so I can know exactly what is the real move, what is the real market structure, what is the real fair value gap that I should be focusing on, because there's just so many. As you know, there's a lot of gaps and a lot of liquidity pools, and you just don't know which one to trust. So having it set up like this helps me kind of see it on just one commodity, right? Like this is just one asset class. Like this is just futures. This is just NQ. Like ideally, I would want to have this like for futures, for commodities, for forex, for currency futures. It's like things of that. But I first want to hone in and get it down just on indices, because this is what I want to trade in. This is what I want to main in, because everything from there is going to branch out, right? And so this is how I kind of want to get my things set up. There's more detail that I'm obviously not showing because there's going to be so much to go over, and I'm only going to be live streaming. I wanted to just live stream to just have fun and like just try this thing out again, right? Because it's been such a long time, and I kind of miss, getting in here in the morning and watching live price action with you. And what do you mean by live price action? I thought you said you're working off the free, delay data. Well, relax, okay? I'm about to show you how is it that I do it. So instead of tracking the actual futures market, I have here the CFDs on the right side. So we're gonna be working off the CFDs here on the NDX. So this is the NDX, but it's also tradable within like if you want to do Robinhood options, this is where you would get it because it's highly liquid, right? Of course, XPX or XSP, sorry, it represents the US 500 contract. So I mean, you can trade that SPX. There you go. Sorry, not XSP. The miniature contract of that's the XSP. So it's like in this case, like the main options that you want to trade would be NDX, but then there's a miniature option called XND. Okay, this is all right. Anyways, we can talk about that some other time. But right now, so I'm going to look at this at the lower time frame. You see that we're going to be running up to here, and this is delayed data, of course. So it's already 9:58. So this is 9:45 candle. So I'm going to be moving into real time now. So I'm going to bring this window over. Now this represents my real time price action. So I was looking at this gap here. This gap. This buy side imbalance, sell side inefficiency. Right here, gap. Include the bottom imbalance on up, close here. And why this one particular? Because this is the one that occurred prior to the takeover of the swing high. Like this is all public, I guess, public knowledge now because he's been talking about it in his 2026 mentorship. So this gap was highly sensitive, and like I said earlier, we're going into premium prices to sell off in the future. So if we're going to go into premium prices, might as well look for any supporting facts that we're going to go see higher prices, right? So this would be a highly sensitive fair value gap to cause price to go up higher, right? If we had crossed over this swing high, I would have reconsidered this. But the fact that we created this, all right, and this relative equal highs, and we didn't cross over this overall high, that still made it like ideal. So you see, it was tapped here, so that's where it was could have been used here as an immediate rebalance, almost like an institutional order flow entry trail kind of deal. Even though it worked like a little bit before, a little bit after its consequent encouragement, like I don't know, I think it was still considered as like a quick rebalance of the gap. And then look what happened afterwards, like around 9:20, and then used it again at 9:30. So and we crossed that target liquidity. So we're gonna see this red buy side liquidity that we have here. I'm gonna reference you to this. This is the level that I was looking at for the day actually. So this high was the high that I was looking for the day. And so I guess my target was met. This is what I'm trying to say. And that's all I'd be looking for now actually. So this gap would have been good. And then this orange represents the first percent of fair value gap at the 7 a.m. protraction stage or the 7 a.m. opening range. And so I was looking for price to take over liquidity from the London session. So we have that 1:30 to like 5 o'clock. I'm include the London lunch time as well. So all this from this high to this low, what liquidity will we take? Sorry, this high to this low, including London lunch. What liquidity will we take as the 7 a.m. protraction? So if we're going to take this high, we should have seen signs to keep going lower. However, because it keep going up and because we're in that bias that we're looking for higher prices, this is fine. This is what we want to see. And now we're going to look for reasons for price to head down lower, probably to here to go up higher. But as you can see, we used this liquidity lower to create the swing low, and then immediately after, around 9:04, we did that market structure shift, and then what was left because we broke these swing highs. What was left behind? This gap. So this gap was the cause or the reason of the catalyst, if you will, of that break of structure. So price reused it once, twice, headed to target. So this is nice to see. Now we're gonna look at where are we gonna go from here, right? Because now we have another opening range 930 to 10, right? We should be marking up our opening range gap levels as well as our first presented fair value. So looking at this price action, um, where would I see it? So I'm gonna move this and I'm gonna cause, I believe this is our first presented fair value gap, right? Because it's tied to that swing, it's tied to that high of this candle. Excuse me, let me zoom in so that you guys can see what I said that I'm looking at. And I'm looking at the stream here from my other device, and it looks like you guys can see it, but I just want to make sure. Okay, in there, down in 30. So we have that high here. That's at, I'm going to be looking up here. So that's that high is at 29,276.1. And the opening is 21, 26, 275. Okay, so we'll take this high then, and then we're gonna include that volume imbalance that we have here. Okay. Hmm. You actually don't like any of these. I don't like them. You could argue that this was the gap that was the catalyst of this swing high break, but no, I don't like that. Hmm. Let's see. We still have time. We still have time here. We have the. No, I don't like any of these gaps, to be frank. Yeah. So, anyways, the reason why I'm using the NDX and like the SPX is because like I was looking into trading credit spreads and debit spreads and Robinhood, and options are awesome, but I really want to learn how to navigate that because I'm really nervous. I've lost a lot of money trading zero DTE options, naked options, and you're trying to make quick buck and stuff, and sometimes it hits, sometimes it doesn't. But you know, reading price action the way I'm reading it now, like it will be certainly very beneficial to be able to just execute in an options trade, right, where you can essentially exponentially just exponentially multiply your money. And in a case like this, where you would anticipate higher prices, like if you can just find out the low of the day, right? Just by doing that, if you can find the low of the day on a on a credit, right, on a put credit spread. Like for example, if I knew that we weren't gonna go lower than 28,891 on the London Lutch, right? If I knew we were gonna keep going up, I can sell a call a put credit spread down at this level, and then I'll be safe knowing that by 4 o'clock, if we end up out of the money, like we'll make all of our credit. That'd be so cool, right? Or even trading like one shot one kills, and just knowing where it is that price is not gonna end up in. You can sell a put credit spread here, for example. Let's say this is gonna be our low of the week, so we can sell a put credit spread at this level, right? We'll get the premium, right? So that's for us, and then we'll just let it play out by Friday. If it doesn't land in the money, then we're good. We're good, and then that's a form of secondary income, right? So it's cool. Or as it's trading before it makes, let's say for example, this is a turtle soup scenario where we're gonna see price hit like a reversal. We can sell a call debit spread, right? So that we can say that if it goes in the money, we're going to be making profit, right? Now, even though it's capped, like our profits are capped, it's still like certain money. So if we can sell like a zero DTE called debit spread on this level, when we make that turtle soup, we're getting in at a cheaper level, right? Because it's out of the money. So we're essentially going to be uh, putting more money up front because it's out. But the moment it starts to do that reversal, we're gonna be immediately in the money, and then you know there goes our premium, there goes our money making machine doing its work. And because it's COD to E, it's going to be highly sensitive, or you can even trade like 20 days out. So it's just like scenarios like these where you're like, damn, I really want to get really good at this because there's so many ways to execute, right? You can enter on the order block, you can enter on the imbalance, you can enter on the liquidity pool, or and you can even enter on options, right? If you're a wild cowboy, you can do a naked call. If you knew this was going to be the reversal, naked call option, buy that sucker, and then boom, keep going in the money, keep going in the money, and then there you go. And like that's another way. It's just going to be very expensive, but it's doable. And like there's so many ways to execute, and that's something that I've been thinking about a lot lately. Like you can oversimplify your lifestyle because I'm someone that wants to know for every excuse me for every asset class like what's going to happen next. Like talking like like bonds and interests, commodities, futures, currencies. Like I want to know everything of how is this gonna affect everything, and like you can know all that and not overstress yourself if you just focus on just one asset class. For example, just on future indices, like that in itself, it's giving you a lot of ways to execute on a trade. So you can trade options, you can trade futures. You wanna do like well, not you can't do CFDs because that's illegal. But like you can get on these entries and you can make your money that way, and you don't have to stress yourself over what's happening in like the Swiss franc currency futures. You can just focus on this, and like you can de-stress a lot of your life, get your time back, right? Because I mean, I'm essentially doing this for a future investment, right? I want to make sure that I do this while I still have a life, and not make this my life, So it's just, but to get there, you got to know your barriers. Is what I'm saying. Like you got to know how far are you willing to invest in to like stress yourself out of this before you start deciding what it is that I could take out so that I don't stress up my life. Hope that makes sense online. Makes sense in my head though. So just going up here for higher prices, and yeah, I mean my objective was met. I was looking at this level here. I should have pointed that out earlier in the stream that I was aiming for this liquidity pool. So again, this is the NDX but higher time frame. I was looking at these swing highs here to be met, and they were met with a lot of great deal of force. Right? See that little entry right there? That's this right here. So that looks really cool. Now it's just a matter of picking the best first percentage fair value gap at the 9:30 to 10 o'clock range, and I don't think I'm seeing that. I mean, we thought this one was a good. So we thought this was the first percentage, but I don't think it's like a high quality first percentage fair value gap, if you will. So we have our time here. We have. I don't like this one. I don't like this one either. Well, you could argue that this is like the one afterwards, but we still had that retracement. Um, you could probably say these wicks. Hold up. 2, 1, 10 o'clock. So anything before the break at this high. Mm, I guess you could say this wick here. The 959 candle. That could be like the first percentage fair value gap. Still going up for higher prices. You would have essentially taken a bet, though, right? Because like you're predicting that it's going to break up the swing high to keep going up. Mm. But now what I think price is going to do is going to come back down, probably hit this level here, this volume imbalance with a gap, and perhaps continue to go up to higher prices. So that's NDX and the reasons why I use it and check price. So I'm just going to keep looking at this, but yeah, I'm going to delete this entry. Just something I share and talk with you today. This is the XPX, right? This is the XPX chart, and this one, like I'm the reason why I have it, of course, is for SMT. I have it because I was testing out the trading options in it, XPX, But again, this is the CFD so that I can have real time data, right? Because I'm not able to afford right now the Trading View Premium. So if you click on SPX, you're gonna see the index. This is the one that you want to track, and not the not the CFD. You're gonna see in tiny letters here, CFD. So you want to go into the index, but you're gonna see that it gives you regular trading hour times. So it's gonna close at 405, and then the next candle is going to open up at 9:30. So I don't want to work with this right now, not regular trading hours. I want to make sure that my data is real. So that's why I do XPX 500, which is the CFD, and I'll go with Capital.com, not because I endorse them, but because they're just whatever. They were the first one that came up, and that's kind of like how I've been doing things, right? Same deal here. So SPX, we're going to go to the daily, see what the heck is going on here. Interesting. Look at that. So we broke that high, and now we're essentially into new higher highs. This should apply to ES as well. Yeah, new higher highs in ES. But again, uh, institutional traders are all selling this stuff. So this is going to be very interesting. So they're probably going up there only to distribute and head things down lower. That's kind of like my macro perspective. Okay, so that's ES, and then let's try MES. Should be the same thing. Yeah, yeah, another high here. But let's go to the original here, SPX 500 Capital. So I would not be trading SPX 500 simply because we're in new territory. I would be sticking my guts into the NDX at this moment. And let's see here. Still no good. So I'm going to keep that on the side here, my screen. Okay, sounds good. But I hope you've been well. I hope you've been safe, and I hope you've been looking at this stuff because this stuff is really interesting. uh, Curious what is it that you trade, fellow viewer? And look at this. See, this is why I keep these liquidity pools. Look at this. Regular structure. Use that support. Boom. Continue to go up high. Stuff like that you see when I mark out these levels, which are levels that are liquidity pools that have not been reached yet. So I'm gonna delete that. And now we were reaching this. See that? I guess the last thing I want to mark up is the opening range gap here. So we have 415 or 414. That's the actual like real closing. But I usually just use the 415 here. So we have a bullish candle. Obviously, this is a premium opening. So we have the first low to high here at 930. Definitely a premium opening gap. We didn't reach the concept of encouragement first 30 minutes. We just kept going higher. So what does this mean? This could possibly mean that we're actually like crazy bullish, like we're trying to get somewhere rather quickly, somewhere up high. The prediction was to get into these highs. I'm sorry, the highs that I marked up here. But if XPX was already breaking up this all-time highs, and in NDX we're still getting up there, let me try and. Oh my gosh, what's the? I only know the futures. I don't really know the options. Look at this. We broke this as well. NDX is the sixth sister. Oh, I'm sorry. It's the last liking one. Oh my gosh. See what I mean? I forgot to click the CFD. There you go. Yeah, you see what I mean? Like you get the regular trading hours only for the actual, you know, uh, the actual NDX. So you got to click on the CFD here so that you get the actual electronic trading hours plus like the real time data. And so this is the sixth sister NDX. So eventually it might actually go up there immediately or try to get as much as premium. We still got OT here, right? We still got the other two sensitive points on OTE. So we could probably even just get up to there and then just head down lower. That's just my long-term prediction, right? And yeah, this year was very challenging. I still remember making videos about price doing this, and then I was like, we're in trouble. We're gonna probably head into here, and then I got so busy with work. Like I would see this occur, and I'd be like, wow, like this would be an area where I would definitely like blow up, or I might get so confused because like I would see price runs go, and then it would immediately go back to my entry, like for break even. So this would have been extremely challenging. Took down this sell side. Uh, we matched this liquidity pool here, and then we had that huge rally during May. I remember that. I was like, oh my gosh, we're creating higher highs. Mind you, I wasn't aware of the news at the time, but I kind of knew that this guy was going to enter now in the office, the new Fed chair of the Reserve Bank, and I didn't know like how much influence or impact this guy was going to make in the markets. But now we're going up, and since we broke this low now, we could see the beginning of the sell program to get down here. Essentially, that's what I'm trying to say. Of course, there's going to be some things that can get in the way. I'm talking about tweets, um, news, what everyone's talking about these days. So anything can happen still, but right. But these are all just like future projections of what things that could happen. And we as a trader, our job's not to predict, you know, exactly where and when. Our thing is how are we gonna navigate through these systems when things occur. Like this is all well and done, right? Getting up to here is good. But if it starts to reverse, like we'll pause for a moment, we'll reevaluate, and we'll see how where we think price would go next, or we can anticipate price would go next. So then that way we can exploit that move and make our living. Like literally, that's all we can do. We can't like buy all these shares and buy all these contracts. Like it's way too much for us, especially retail traders. You have to be a big boy, big player in these markets to be able to make a move, right? The whale. Well, you and me are not like that. If you're watching this stream, we're definitely not like that. No offense, but uh, so we just gotta take in the move and then just make our living out of it as much as we can, right? And I definitely want to make another video on the response that I saw on this guy's podcast, and so that'll be coming out soon. Uh, yeah, so that's kind of like what we've been doing up here lately. This thing is gonna keep going up. I really don't like trading market conditions like that because if it's just gonna keep going up higher and higher and higher, like it's gonna be like immediate rebounds higher, immediate rebounds higher, and I personally don't like that, especially after we broke the swing high. I would want to see a small retracement back down, probably into this suspension block, so we have that gap here, volume imbalance, volume. Let me see here. Close at 28,810. Open at 2807. Okay, so from this high to this low, we'd like to see that be retreated to now that we're up here. So it's going to come back down here, probably go up further. If not, we're just going to do like a quick rebound and then continue going up higher. But at this time, because we have that opening range gap, close and open, premium, we didn't even get that to consequent encouragement, probably not even like the first octane level. So it's just going to keep going up higher. I'm not gonna be touching this right now. I really wanted to. Matter of fact, and when I saw this, I really wanted to. It's gonna sound weird. I really wanted to touch this in this when we had that little break structure here at 902. But it's okay. I was still like getting myself adjusted, getting myself still to wake up because honestly, like I just woke up like maybe an hour ago. So I'm just still trying to get things ready here. So I'm gonna head out for the time being in a bit, and maybe like 1 or 2 more minutes. Gonna be hanging around here for a little while. Maybe I guess showcase you the reasoning, right? Um, so I guess now that we're here, might as well make yourselves comfy, right? We're gonna go into that perspective that I was telling you guys about. Is this where I have my markings? Oh no, I have it in the other account. Okay, hold up, guys. This is the leftover. Okay, so this is leftover, and we're gonna go into NDX. That's where we were. See if the yeah, it's actually in another account, and quite frankly, I don't want to pull it up at this time. Uh, okay, so I guess we'll just leave it up here then. I hope you're having a fantastic morning. I hope you had a fantastic morning. I hope you enjoy watching the church with me and just taking a peek at my notes. I'm not someone here to educate. I'm not someone here to like um, what you may say, yeah, educate and like teach you how it is that these things work because that's not my position of authority. I'm really just here to just like have a conversation with you, to just have an engagement and like maybe I guess like coach, but I don't even think I consider myself a coach because I'm still learning in the process as well. If anything, like I see myself as like a student, with an open book. And if you want to come peek at my notes, like you're more than welcome to. I like to, uh, you know, showcase what it is that I got because it's really tough in this business when you're spending a lot of time alone in solitude, just looking at these things over and over and trying to make sense out of it, trying to make sense of the teacher. What is it that he's saying? And there's no way of confirmation of you getting to see that like what it is that you're learning. It's valid. So starting this YouTube channel, starting the streams, just doing any of this actually is just to like I guess get eyes on my notebook and then see if people are resonating with it. This is what they're coming up with their conclusions as well. And then eventually, say we could kind of help each other grow and understand better these concepts and see where we go from there, right? Make ourselves a nice, happy future. While we still can, right? Okay, enough of them being facetious. Damn. All right, so we have this liquidity pool met. Now I'm eyeing this. What is this? The London lunch. So I'm gonna see if we're gonna head up there soon. But again, this is the delay data, so maybe we've been there already. Why is it stuck on the 1 minute? Look for 15 minutes. 16th of July. Let's see. What is this lunch it said? So I think we still got ways to go up there. 16. Ah, here it is. I see you. Yeah. Yeah, no, we still got a little bit of ways to go. Uh-huh. Alrighty. So I guess that's all I have for now because prices are just gonna keep going up higher, higher, higher. So I don't really want to get involved in this stuff. Okay. Hope you have a good one. Be safe.